All right, traders, this is going to be a very important in-depth price action analysis on the SPY. Within this video, I'm going to be explaining to you where I'm planning to buy my put options on the SPY, what bearish confirmations I'm going to be looking for, and key levels that I'm going to be looking for into this week to buy some put options on the SPY on the market. With that being said, looking at the current daily chart, I do believe SPY isn't done just yet. I definitely see a crash coming. But in terms of the micro and very short term, I do think SPY has some upside potential before we see another crash. So I'm going to be explaining to you in terms of, what we're currently looking at into this week in the trading plan. So in terms of the short term, for the short term, the daily chart does look bullish. And let me show you why in terms of the candlesticks. So I haven't been swing trading lately. I've mainly been doing in and out quick day trades. Sometimes I'll hold for 30 minutes. Sometimes I'll hold for about an hour or two. That's what's been working best for me in this current market environment. In terms of swing trades, I'm trying to only make one of those a week. But I haven't been doing much swing trading lately because I haven't been seeing the opportunity for swinging and I've been crushing it trading. With that being said, in terms of the SPY, this is what I want you to understand, right? So we're just going to quickly go over this daily chart. You can see right here, this is key support with nice upside potential, right? Once it cracks, it has a flash crash and then it pops back up. It turns this previous support at 456, 457 into a resistance level, which is bearish. So for the macro, SPY is going to keep going down because it turned that previous support level that had nice upside and also flash crash from there into a resistance level. Now you can see right here, this is going to be your new support level. Your new support level is going to be towards 444, 446. Once it cracked 446, it went all the way down to 435 before bouncing back up to the previous support, and then it turned it into a resistance level. And then you could see once that occurred and the previous support reacted as a resistance level right here with the bearish confirmation on the daily, SPY had another massive sell-off, cracking the 420s, going all the way to 410. Here's where I believe we are currently at in terms of the SPY chart. So in terms of SPY, your previous, before it had this big crash, right? Your previous support was right here at 435. And you could see it crashed and then it popped back up. And ever since, it's been attempting to turn this key 435 level, and you can also say right here towards 439, into resistance, which means the macro trend for the SPY is still bearish. So with that being said, here's what I currently think we're looking at. SPY has been trading in a price channel from $428 to $440. It's been going back and forth in between that channel. If you've been watching my videos on the SPY, I called this whole move out, explaining to you it's going to start forming a channel and stuff like that. We did nearly get to 446.60. This got all the way to $441.11. Now, with that being said, it's trading towards the lower end of the channel. And it filled a gap. There was a gap to fill at 430. It had its gap close reversal. You could see once the gap filled, it started reacting as a reversal. Now there's a new gap that's waiting to fill at 435.71. And the daily chart does look bullish for the micro. And the reason why I'm saying that is we are at the lower end of the channel. There's a gap to fill above at 435.71. There's also still a gap to fill at 446.60. And in terms of bullish confirmations on the daily, this is a bullish green wick. This is very, very bullish for the micro. So due to these reasons, this is why I didn't decide to play puts. You guys know I had a very nice day trade in terms of my call options using the gap close reversal when it hit 430. And I'm not swinging it because it's not worth my while to swing this. It's towards like the lower end of the middle, but I'm not playing that whole swing game. Swinging is only going to be like A1 perfect setups. The profit margin isn't big enough. You're looking at 3 points of potential profit margins. Theta decay over the weekend is going to hurt you alone. So with that being said, whenever SPY forms this green bullish pin candlestick, right, towards key support levels, it tends to go up for the short term. I'll show you some examples. So SPY sold off, it came back with the green bullish candlestick. So this candlestick right here, let's look for some examples where the SPY sold off and it formed that same candlestick. You can see it was selling off here, formed a very similar candlestick. It started to running up. It was selling off right here, formed a very similar candlestick towards the gap fill level, very similar candlestick towards that gap fill level, having that gap close reversal to then shoot back up and fill this gap, right? You see the pattern, sells off right here. There's the candlestick. It starts to rip up. sells off right here. Very similar candlestick, starts to rip up. So you get the point. The point I'm trying to make here is from a technical view, it's been trading in a channel where at the low end of the channel, it filled this gap. It's having a gap close reversal, which is bullish, and it's also forming this bullish trend reversal candlestick. So I'm not really interested in buying calls at the very moment. And there's going to be some key levels that you have to understand in terms of calls and puts. I'm mainly going to be looking for something like this, and this is what I'm looking for. As long as 436 can remain a resistance level, we're going to be on track to really try to crack this 428. Once 428 cracks, you're looking at a very nice key breakdown pullback. But if this 436 continues to hold above and react to support and starts breaking out, then we're going to see a 446 gap fill within time. So it's quite the battle. We are in quite the battle right now, and we're going to be approaching the middle section of the battle. So my game plan is, if the SPY rips back up to fill this gap right here at 435.71, which is a key level, if I see it react as a resistance, yeah, it's reacting as resistance here, reacting as resistance. If I see resistance start to form at around this level, I'm going to be interested in day trading some put options. Now, in order for me to swing trade put options, swing trades are going to be made past 3:45 p.m. because with swing trading, one of the confirmations I use to enter is what the daily candlestick looks like. So what I'm telling you is, if the SPY is forming a bearish red candlestick like this, closing weak, looking bearish, once it fills this gap here at 435.71, then I'm going to potentially look to swing trade a put. The best price to swing trade a put would be towards 446.60 for more of a macro trade. But that's kind of where we're at. So in terms of puts, I'm waiting to see how it reacts to fill the gap. If it looks bearish, I'm going to look to get a puts. If I get stopped out, then the next level of interest is going to be towards 446.60 cents. The reality is, if the bulls can continue to hold this channel, if they can start to break above this 436 and turn into support, this will be on track within some time for a breakout to 441 to 446.60. So we are in quite the battle zone right now. We really are. And if they continue to hold up, if they continue to break out and turn these key levels into support, we will be seeing that breakout. So at the moment, that's where I'm at on the SPY. Keep in mind, with these gap strategies, they change rapidly at times, depending if SPY is a big gap up or a big gap down. It alters the plan, right? So we got to see. It's a daily updated price action analysis, and that's another reason why I'm not looking to constantly swing trade, because things can change very rapidly with this strategy, especially in terms of overnight with the new gap ups and the new gap downs. Originally, 438 and then also 446.60 were the key levels of interest for puts. Now we're looking at a potential put at a lower level, but we got to see how this reacts. So if this breaks out, turns into support, this is really going to be on track throughout the week to go to 446.60. But in order to do that, it's got to turn the 438, 440 into support. But that's where we're kind of at. That's where I'm interested in playing a put towards 436.60. In terms of calls, I'm kind of on the sidelines for calls at the very moment. I do think we'll see a little micro run up into the week, but overall, we're definitely due for some sort of sell-off. And who knows, maybe that sell-off doesn't occur until 446.60. We got to see how the daily candles look. This is a daily updated price action analysis. The very lucrative trading opportunities are, towards market open, when we get a much better read on the situation, on the new gap ups, the new gap downs, how it reacts for the quick micro trades. I'm telling you, the best thing to do in this market is to be getting in and getting out and locking in your profits, doing quick micro day trades at the best prices with the best setups. Best thing you could be doing. If you're just going to sit here and try to swing, I'm telling you, you're going to throw away all your money. I haven't been swing trading that much. Ever since I haven't been doing that much, I've really been dialed in, laser focused on day trading, and my results have been so much better when I just focused on the day trading. In terms of swing trading, I want to keep it super high quality and just have like one per week. In terms of day trading, I'm trying to keep it no more than 5 trades per week. So 20 day trades a month, and then 2 to 4 potential swing trades a month. That's where I'm kind of at in terms of like max, in terms of like max trades for the months. But yeah, so far so good. We're off to, a great start. And for anyone who did, swing trade puts over the weekend, we addressed in the chat room like why you should not be doing that, because it's like it just hit the oversold key level point of the channel. This could still go to 446.60. Plus you got the bullish candlestick, you got the gap close reversal, and then you have this gap to fill at 435.71. So that's why we decided to not swing trade any puts over the weekend. But yeah, this explains it. That's my explanation on the SPY. It's going to be very interesting to see how we start reacting, whether we're going to get something like this and then it just ramps up, or we get something like this where, you know, it forms the candle, it goes to 436 to fill that gap. It just sits there, it sits there. You got the bearish candlestick, and then it's over once that bearish candlestick comes in. So that's when I'm going to be interested in swing trading. We get a bearish candlestick on the daily towards a gap fill level, whether that's 435.71 or 446.60. In terms of day trading, like I said, I gave you the potential opportunities with the SPY in terms of it filling the gap. All it's really got to do is break out above 432.40. If it can break above 432.40, we should see a gap fill to 435.71. And then that's going to be the key level of interest for a potential put. But yeah, that's my thoughts. That's my analysis on the SPY. And for those of you who are interested in trading live with us at Market Open tomorrow, that's going to be the first link down below in the description. Oh my gosh, man, this camera, it's the lighting. But yeah, that's going to be the first link below in the description, right? I don't look as like, it looks all faded out because like I'm behind the window and the sun is just blaring. But if I do this, it looks a lot better, but then it loses focus. Got to figure that out. But anyways, it's the first link in the description. You get lifetime access. It's a one-time fee. You get to watch me trade live at Market Open via webinar every single day. You also get access to the real-time trade alerts, the daily watch list, the daily stock analysis, the price action analysis, the video lesson library, where you get to learn the technical gap trading strategies that we're using to consistently make money within the market. You also get access to the psychology within the video lesson, library, the psychology, the mindset to trading, the risk management, the position sizing, the Excel files. There's a lot to it. The chat room, of course, and the members within the chat room where you can send me a direct message one-on-one. With that being said, that's going to be the first link in the description if you'd like to trade live with us at Market Open tomorrow. Like I said, we got a great trade planned for the SPY this week. And then as it continues to, fluctuate and gap up and gap down, there's going to be more trading opportunities, right? As SPY continues to flip-flop, we're going to adapt and flip-flop with it. Instead of just holding through the flip-flops, we adapt. That's what we do differently. So yeah, if you are looking to really learn, how to master these gap trading technical strategies through day trading and then also through swing trading, it's going to be that first link in the description. And I'm looking forward to seeing you guys tomorrow live at Market Open. Let's continue to crush it.